Hello friends, welcome to the Money Matters podcast. Today with us, we have Avinash Pathak. He is a fundamental analyst at LKP Securities Ltd. Hi Avinash. As we discussing today Tega Industries, can you tell us about Q4 FY23 numbers of this company?
Thanks for the warm introduction, Gaurav. Now, coming to the results, Tega Industries reported strong set of numbers, which were better than the expectations and sustained the strong momentum. So there was a challenging global macro environment, which was marred by the geopolitical issues in Europe and volatility in currency. Because after all this, also there was a strong performance for Tega. So coming to the results, net sales for Q4 FY23 was almost 3.9 billion, which was 36% higher, and for FY23 it was 12.1 billion and was 27.6% higher YOY. And there was a strong growth seen across all regions. On the EBITDA margins front, margins expanded by almost 217 bips for the quarter, that is for Q4 FY23, and there was a 306 bips YOY improvement for the yearly, that is FY23, at 22.3%, that is the EBITDA margins. So because of this, higher operating leverage led to PAT growth of almost 58% YOY growth for Q4 FY23, and there was a 57.4% YOY growth for FY23. So this is on the quarter as well as on the yearly PAT growth. Now there was a substantial improvement in the volumes also, and the volumes grew almost by 15 to 16% for FY23. Overall, the management reiterated that it expects a consolidated revenue growth of almost 15% or more in the coming years, and the margin profile is also expected to inch up given the benign commodity prices. So this was in crux the results for Q4 FY23 numbers and for the yearly results.
What's your opinion on Tega Industries and its target price?
Now on the outlook, as you asked, on the business, so we remain positive as it is well positioned to seize the opportunity within the sector it operates in, and the future growth prospects also remains intact, mainly because of the given reasons like greenfield expansion in Chile to increase the growth opportunity in the Latin markets. Another reason being the value accretive acquisition to diversify revenue stream and increase the product offerings going ahead. Third one being the higher penetration opportunity for Dynaprime liners. That is one of the products that has been doing well from quite some time and expected to deliver around a 25 to 30% CAGR over FY22 to 25 expected. And fourth reason being that the sustainable EBITDA margins due to the operating leverage, which they will be able to maintain or inch up higher as we go forward. So similarly, because of that, we feel that the stock is expected to do well ahead too, and we have a buy rating on the stock, and we have maintained the buy on the stock with an increased price target of 945. So this was it on Tega.
How do you see Q4 FY23 result for Schneider Electric Infrastructure Limited?
Well, Gaurav, coming to the Schneider Electric Infrastructure Limited results, the results were quite good, with almost the highest ever revenues and profit in FY23 since inception. So that has been like one of the best quarters that has happened, and one of the best yearly numbers it happened for Schneider. So this came as a positive surprise both on the margins for the year as well as for the quarter. So Schneider Electric has continued its momentum and remain in the positive territory now almost for the 6th consecutive quarter, with a consistent profitable growth across all its 6 quarters, that is the last 6 quarters. Now the order inflow during the quarter and for the full year FY23 also have notched up higher, and at an incremental of almost like 10.6% and 10.3% for FY24, Q4 FY23 and FY23 numbers. So now the management indicated that there has been a good momentum in orders across all segments, including its emerging segments. The overall order backlog too has improved almost like 15% YOY for FY23. So it provides a healthy revenue visibility ahead for the coming years. So across the order backlog is also good, order inflow has been good, and all the segments which it operates in are doing well. So the diversification, which has been one of the mainstays for Schneider from quite some time, that is from some quarters, it has been bearing fruits as industry and its building segment is growing by almost 40%, and clouds and services and data centers, that is also one segment where it provides its services and products, are almost going at an incremental of almost 150% YOY. So results overall were good for the Schneider.
What's your opinion on Schneider Electric Infrastructure Limited and its target price?
So now coming to the outlook on the business momentum across from quite some time has remained positive, and we also remain positive on the segment, and it has been giving positive signals across its traditional and emerging businesses, and we expect this to continue as core data improves, which reflects on the overall business it operates in. That is with adequate digitalization opportunities ahead and the positive outlook company is trying to foresee in the coming years. So overall the momentum remains positive. Now the company's performance has been consistent almost for the last year, that is FY22 and FY23, wherein execution has remained strong after a long gap, and expects it to continue with strong order book and pipeline ahead. So overall company remains optimistic in the short to medium term with support from the government in the form of investment reforms and policies. Considering the FY23 performance, we have tweaked our estimates on the upper side, largely on the margins, and remain positive. We maintain buy with a revised target price of 265. Thank you, Gaurav.
Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing. The securities quoted are exemplary and are not recommended.